the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson, and let's update. All right, sideways since the beginning of the week. We had the gap down on Monday to start things. A bit of a run back up, again today, but overall it's really been very choppy, sloppy, sideways type action. Clearing about, 100, 150 points maybe since the beginning of Monday, but very slow. A couple of good pushes here and there, and that's really all we've seen. We started the FOMC meetings today, so I think that had a little bit to do with it. And we were waiting on Apple earnings, which, now that it is after hours, has reported. And it reported very well. Everybody, I think, not everybody, but I think there were quite a few people that were expecting it to not do well. We had seen that, and it had been consistent with other stuff like Google and some of the banks. But Apple, in true Apple fashion, completely destroyed earnings. And let's see, last time I checked, I think it was up around 600 or something. Yeah, 598 seems to be where it closed. Still not struggling, but still rolling around in about the 7% area. 5%, 10%, that's a pretty common gap after earnings are reported, whether it's good or whether it's bad. That's a pretty common gap. So here we are, I should say actually 2.5% increments seems to be about where things like to go. But 5 and 10 are pretty common. Here we are stuck between 5 and 10. Things can change before the morning, so we might go up a little bit more, we might go down a little bit more. It was my prediction to my subscribers that we will open tomorrow at 600, right around that 600 mark. That's my prediction. Even right now at 598.50 is pretty stinking close, but there's some overhead resistance that on Apple right at around that 600 mark, and a lot of times these gaps do actually open at logical places, either up or down. So a very logical place for Apple to open tomorrow would be right around that 600 mark. We'll see how close I am. Anyway, point being, it reported well, doing very well, up about $40 as we speak. So I would expect, with the markets doing what they did in the after hours, to hold most of these or some of these gains coming into tomorrow. So expect a gap up. I would think we would. By the time we get the doors open tomorrow, we're not up a whole lot in the S&P and the Dow, which is common. They're not really related. They're not tied to the to Apple, as is the NASDAQ. So, of course, that makes sense. Where we're seeing the NASDAQ, the NDX futures in the after hours are up about almost 1.5% already, with ES up about 5 points. That's about 0.3%, and about 2.2% on the Dow. So you can see a huge difference for the NASDAQ markets, which obviously makes sense, being the tech stocks. So coming into tomorrow, I would expect then a little bit of a gap up, at least from the NASDAQ. At 4.5 points on the ES, that's easily recoverable overnight and into tomorrow morning's trading. But a 1.5% move on the NASDAQ will be pretty hard to come back from overnight. So I would expect to see at least a gap up there. And maybe even a gap and go come morning time. Watch Apple closely. Might be able to catch a little bit of that coming into the open tomorrow. Okay, let's look at the indices themselves, and you can see we've been traveling around in this little sideways consolidation. Now, what I'm seeing right now in the after hours has the markets at about, I'd say, converted from futures over to cash, right around 13,000 mark or so. Maybe just a bit above in the Dow. So you can see we haven't made much of a move. I mean, we closed at the 13,000 mark. We're up maybe a little bit in the after hours, but we're still going to open right around this 13,000 area. Point being here, without being up here in 13.1, 13.2, somewhere there, it's not really that big of a move. But we are in this, I got to call it a pullback right now. It's very difficult to figure out exactly where we are, if you're an Elliott wave guy, where we are in the count. Elliott wave style, so I'm not going to worry about it. We're going to work off of nothing but technical analysis. And where I want you guys to really watch for things is back up here around the 13.2 and really, ultimately, the 13.3. That's the big dog. To the south is 12.700. That's the big one headed down. We could have maybe a little shoulder head, right shoulder forming over here. So you can see this would be kind of what would be called maybe a double head. But anyway, point being, could be kind of a head and shoulders pattern here. It's a little ugly, but the point is the neckline would be 12,850. So be watching that level on any drop into tomorrow's trading, or even the middle of the week's trading, since I won't be back with you until Thursday. Watch this 12,850 level. So for your Dow, 12.7, 12,850, 13, let's say 13.2 or 13.3. Those will be the levels you'll want to watch going forward. As you can see that this consolidation has stuck us 1, 2, 3, 4, 5 days in a row right at or around these moving averages. The 20 and the 50 have been danced around the last week or so of trading. Not much in the after hours, so I'm not going to say look for a huge move up or a huge move down, because there really wasn't any kind of movement done per se for the SPX or for the Dow in the after hours yet. But this is the area where we're really stuck at, right around these moving averages, dancing above them, below them, and just stuck sideways for the last 5 days. You can see I can start right here and move it sideways, and we haven't gone anywhere. So since the close of whatever 1, 2, 3, 4, 5 days ago, we're not going anywhere. We're literally stuck in a sideways consolidation. So it's very, very important, if you don't want to get your hand slapped, to wait for these larger areas to be broken. Those larger areas for me are really contained with 13.3 and 12.7. If you want to sneak in a little bit here or sneak in below here, great. But they are more aggressive. You must be very, very cautious. Use good risk management on those trades. Got to be able to watch them just in case there's another big little wick put on and it runs itself back up. So the more major areas I've defined for you. Watch those very closely over the next part of the week. Here's the NDX side. It has bled downwards. Why? Because Apple has been bleeding downwards. Hard for the NASDAQ to go one way without Apple kind of helping it along, especially when it comes to up. So without Apple going up, it's very hard for the NASDAQ to make any ground to the long side. As you'll see, it was down 0.5%, which was much greater than what the other indices were. They were almost upper break even for the day. This one was down. So you're still looking at this thing as maybe now a bull flag. In the after hours, the last print on the NASDAQ futures has us at about 2670. So that'll put us up and around this area, probably, 26. I'd say right up around 2675-ish or so on a cash equivalent. And so we're going to be right up around in this little gap fill area if it holds into tomorrow. So a very logical place to see a gap up tomorrow, even in the NDX. But the bigger areas really don't come into play until we get way up here, guys. So yes, it's a good start for the NASDAQ. And yeah, there's the potential for a nice little bounce out of the deal. But until we clear these areas up here, it's not confirmed. So just because Apple reported well and we're running up really hard in the NASDAQ, sure, we might gap up tomorrow. We might gap up 40, 50 points. That's great. But nothing will be broken from a bear side. Keep that in mind. So you've got to wait for these larger areas to be broke before you make any kind of a move. If we look at it at the daily, I'm going to tell you we're in a bull flag right here. This little pullback is nothing more than that. It's just a pullback. And it's a bull flag pullback. We have the 50, we have the 20 to clear, but if we can get back up and above about 2750, that is your area to really go, for the bulls. This is the area to watch to be claimed by the bulls. I don't know if we'll hit it tomorrow, but over the next, I would say, week or two. If it can get back above there, then I think this can be confirmed as a bull pullback, and we could see some higher prices breaking this 2800 area eventually. Because this little pullback here hasn't been great, it hasn't been grand, it's not screaming downwards by any means. It's been a very slow, choppy, controlled pullback. That doesn't scream bearishness, not yet. Not yet. So to the long side, looking for one of these areas up here to be broke. To the downside now, if we can get back below about 2500, 2550, now you've got something to work on to the short side. From a weekly perspective, you can see straight up for 1,000 weeks in a row, and now we've had 2 weeks back and working on that third. Now, we're not there yet, so we'll see how we close on Friday. Anything can happen, especially now that we'll be back up towards the top of this move coming into tomorrow's open probably. So we'll wait and see where this closes ultimately on Friday. Just keep in mind that what it is right now is just a bull pullback. There's nothing serious from a bear side quite yet. Was nice to see it rest a little bit, though, maybe giving us some opportunity to pull some profits out later on if we continue on our way back to the upside. Here's the SPX, broke this line, came down here, 1, 2, 3 up, 1, 2, 3 down. And without breaking this lower level, now we are kind of in limbo. Overnight, we're only up about 4 points, so we're right back into this 1374, 1375 area. Once again, as you can see, nothing major here. Decent move, but nothing major being put in quite yet. Really have to wait until tomorrow morning's numbers to see what we get when we open. But just a chopping sideways action. So we've seen the up, we've seen the down, but look at this, guys. Take a step backwards and look at the bigger picture. We're trapped between about 1390 and 1355. That's the mark. So we can contain price very nicely between those two lines. Those are your marks. 1390, 1355. Be cautious with that on the trading side. Buried below the 20 and the 50. Looking to get back up there. Any further press to the downside, I am loving the 1340-ish area, which I think everybody and their dog has had on their support area for a while. But I love the 1340 support area as well. I also really like 1300 and 1320 on a break of that. So if we can get back below this area here, right around in that 1340 area on some strong move to the downside, you bet. I would not be surprised at all to even see us come all the way back to the 200 day. I know, how crazy am I, huh? That's a little bit deep, but it really wouldn't be one of those, wow, I didn't see that coming. I wouldn't be surprised at all if that happened. But we're going to start with 1340 first. On any further push to the downside, breaks of 1355, look for 1340. The VIX is down, staying well contained between the 15 and the 20 range. You know how I am about staying above 20 if it's going to get, a little bit of fear is going to roll into the markets. This VIX needs to be above and stay above the 20 mark. It's not. It's still in the area of complacency. So it winds its way sideways. So far, so good, even on a daily or a weekly, depending on how you're looking at it. FAS and FAZ, I think, have some really nice setups here. This looks like a really nice 1, 2, 3, 4 with maybe a 5 yet to come. We could see that on a gap up tomorrow. But if we don't, I love the 100 mark. Back up and over 100, I think you should have that on your charts as something to watch on the FAS coming into tomorrow morning's trading. I love that for a trade. If we can break that big 100 area, we break quite a few things at that point. I think that's a great shot at a trade. How much you'll get out of it, I don't know, but I would think at least $1 or $2 could be very. I think $1 or $2 could be in the cards for that trade. Really, really like that. If we look at it on a daily, the same thing holds true here. That gets us back above the 50-day moving average and back into maybe the 20-day. That's, like I said, $1 or $2, somewhere up in that area. Could make you a little bit of money on that deal. The bigger area to watch here, guys, on FAS, even beyond 100, is 104. Loving that area. I'll be watching that very closely as well. If we can break back above 104 or 105, I love that for a long opportunity. Back below 90 is your shorting opportunity in FAS. FAZ would be then back below, I'm going to say probably 21. I really wouldn't want to do anything until we got back below that 21. That's kind of what I'm seeing as well on the daily. That gets us back below the 20-day moving average and into some of these lower levels again. So hold on to this one here. I'm going to call for maybe 20 or 21 to the short side, and then 24 or 25 to the long side. That will be your marks on FAZ going forward. I think your best opportunity at trades is above or below one of those numbers I just gave you. If the bullishness obviously continues in the markets, this one's going down, and in that case, it's 20 or 21 for your trade. I think there's opportunity in that one as well for, I don't know, this one's only a $20 stock, so you might only get maybe 50 cents to $1 out of this one. Then you'll want to be a little bit more careful. However, breaks of $20, who knows? Who knows? This thing could see 18 or 16 before it was all said and done. That'll do it, guys. Wraps up today's video. If you like these videos, I do them every day, except for Saturday for the subscribers. Much more in depth, a lot more charts, a lot more lines, a lot more suggestions on what to do here. Go long, go short, those type of ideas. Cover oil, cover gold, cover stocks. And of course, the indices themselves, including the Russells. Um, I have the mentoring course, which has really been rolling right now, guys. It's great if you want to, if you're getting your tax return back, and there's a million things I'm sure you would want to spend it on, but why not spend it on something that will give you an education and allow you to make money the rest of your life? That's what the mentoring allows you to do. So you take the mentoring course. And I work with you forever. Literally. I mean, you can call me up anytime. We can go over stuff anytime. Um, I'm always at your beck and call. It's all one-on-one. It's all live. There's no group discussions or anything like that. So you don't, you can ask whatever questions you want to and not feel insecure about, asking the question itself. I try to make it as comfortable as I can for my students. So a great investment for yourself, a great investment for your future. And a good opportunity to get yourself on the right track if you're struggling in your trading. This sideways chop, guys, listen, it is difficult to make money in a market that's going up and down and up and down and up and down like this. And up and down and up and down and up and down like this. Okay? If it runs straight down or if it runs straight up, everybody feels like a champ. Throw a dart at a board, go long. Throw a dart at a board, go short. And guess what? You make money, you feel cool. No. Real trading is all about this sideways stuff because that's what the markets usually do. So if you're making money on the way up or making money on the way down and then giving it all back on the sideways chop, I can fix that. We can work on that. We can make you better at entries, exits, what to do, when to do it. Just send me an email, give me a call, and we can talk more about it. All right, guys, let you go. Have a great one. See you on Thursday night.